Welcome to ETF.com University, where we demystify the world of ETFs. My name is Dave Nottig, and I'm the Managing Director here at ETF.com. And this is our third video on ETF Due Diligence, showing how to use some of the tools we have available here at ETF.com. If you haven't seen the last couple of videos on due diligence and looking at efficiency, I recommend you go back and watch those before we move forward. Today, we're going to be looking at tradability. So what do we even mean by that? Well, at its most basic level, tradability is the metric that we use to judge how quickly and how easily you can get in and out of a fund without moving the market. But ultimately, it also combines two separate but related issues: liquidity and fairness. I consider liquidity how easy it is to make a trade. So can you drop a 10,000 share order in and get a fill? And fairness is whether or not the price that you get is a good representation of the fair value of that ETF you're interested in. We're going to help walk through how to evaluate both of these things. Now, when you go into any ETF fund report on ETF.com, whether you click on a link in our Finder or simply enter a ticker into an address bar like this, you're going to get met with this screen. So let's dive right in and look at the trading metrics by clicking on the Tradability tab. Now, the first thing that you'll see here is the SIBO Book Viewer. This shows real-time trade data right from the SIBO markets, and it shows how this ETF is trading right now. So you can see the current bid and ask here, you can see the best price that you can buy it for or sell it for, and you can see how big those bids and asks are. So you can see right now, there's only a penny difference between the bid and the ask on this ETF XLE. Below that, you can see the actual book. Now this shows you the limit orders that are currently sitting out there that are not the best bid or offer, and this can give you some sense of how deep the liquidity of this fund goes. And then you can also see the last 10 trades just to get a sense of how much trading is really happening. Next to that, you'll see this. This is the block liquidity score, and that measures just what it says, how easy it is to trade a block, in this case $1 million worth of the fund. So a fund like this, XLE, trades super easily, and it scores a 5 with flying colors. For comparison, let's look at KBWD, the Invesco KBW High Dividend Yield Financials ETF. KBWD tracks a dividend yield weighted index of US financial firms rather than just all large cap stocks. It's not quite as easy to create or redeem shares for the fund without moving the market, so it scores a little bit lower. Now, does that mean you can't get a good trade in a fund with a lower block liquidity score? Of course not. It just means you may need to work a little bit harder to get a really good execution. So why does this matter? Well, I keep a file of interesting trades, and a fund like KBWD will have a harder time making a trade like this. This is a huge trade that came through with nary a blink from the market, and that's what we mean by block liquidity. XLE, on the other hand, could probably make trades like this all day long. So let's go back to XLE here and look at these three big graphs that take up the bulk of the tradability section. The next three metrics are all graphed over the course of a year. The first one looks at the bid and the ask price on any given day, and this is an average over the course of that trading day. You'll notice for XLE here that these are extremely tiny numbers. Quite frankly, that's fantastic. That's as good as it can get. So what's reasonable though? So we do a study at the end of every year that looks at the weighted average spread across all funds and asset classes. And you can see here that for all ETFs, the average spread on any given day is about 0.04% or 4 basis points. So XLE here is very, very liquid indeed. But note, however, you should expect a more interesting, maybe more exotic ETF to trade more widely. A 20 basis point spread, say, on an alternatives ETF isn't outside the realm of possibility, even for an ETF with huge volumes. So far we've talked about pretty pure measures of liquidity. So let's move on to that issue of fairness. This next graph shows the premium and discount over the course of a year. Now, a premium or discount is the difference between the closing price of the ETF and its net asset value, its fair value. We use premium and discount to see how far a fund is trading away from that fair value at any given time. So funds like this one, XLE, trade pretty close to fair value, and these small moves above and below zero can really just be considered closing price noise, or just the difference between where an index provider gets a closing price and maybe where the exchange marks that closing price. In a fund with less liquid securities, like say a high yield bond ETF, you might see a chart a bit more like this. Here you see a slight persistent premium, which is pretty common for bond funds. That's because NAV is always calculated as what can we sell all these bonds for right now. In other words, the ETF net asset value is priced using fire sale prices, whereas the market tends to assess the value of the fund based on what you could really buy and sell the bonds for. So some persistent premium here is actually pretty normal and to be expected. This last chart is volume. That's pretty self-explanatory. The important thing to look at here is less the absolute level, but a pattern. And that really goes for all three of these metrics. So for example, looking here at HYG, the iShares High Yield Bond Fund, the premium might be a little off-putting, but if you look at it over time, it's pretty normal, which suggests there's really not that much to worry about here. So those are the three big charts, but let's look at some of the summary statistics over here on the right. The top half of this box gives you easy, at a glance, easy to compare numbers for everything we just saw in those charts. You've got medians, averages for all those statistics, pretty straightforward. The bottom half of this box goes into all the stuff underneath that block liquidity score we saw earlier. So things like impediments to creation, which are really any red flags about why an issuer might have a problem issuing new shares. So for example, in the Arab Spring, the ETF EGPT had to close creations, and that would have raised a red flag here. Market hours overlap is the percentage of the trading day where the fund and its underlying holdings are trading at the same time. Now, we talked about this briefly in our trading video, but if you've got a US fund holding stocks on, say, the London Stock Exchange, you really just have an hour or so where there's any overlap. And you should expect this to be the best time to trade that fund. If your fund trades, say, on the TSE in Tokyo, there's no overlap at all, so you'd expect some advertised premiums or discounts that aren't necessarily real. They're just a representation of the fact that these market hour overlaps aren't there. That tends to lead to a slightly harder to create ETF that leads to a slightly lower block liquidity score. These statistics over here, the creation unit, units per day, unit cost, all really come down to the same thing, which is how hard is it for an authorized participant to make new shares of this ETF? How often does it happen? How expensive is it for them to do it? So why do you want to know any of that as an investor? Well, this lets you know if you could put on a really big trade with a market maker without much difficulty. SPY, for example, trades almost 922 of its 50,000 share unit creations a day. That's a lot. So big block trades are as easy as pie for SPY. By contrast, if you have a fund that only traded, say, 1 or 2 creation units of 50,000 shares per day, you might have a little bit more trouble getting 30,000 shares put through quickly. So there you have it. These are the core metrics of tradability. You really can focus on those charts on the left. I think those are the most helpful, but I think all of these statistics can really point you in the right direction for picking a fund that's got enough liquidity for what you need to do. I hope you'll join us for the next segment in this, where we're going to talk about the fit metrics that really get into whether a portfolio is right for you from a practical investor standpoint. Thanks for joining us. We'll see you next time.